Well, let's get back to the broader market setup. How is it looking like and which are the stocks that you should be keeping on your radar? Let's try discuss all of that. And for this, let me now welcome Aditya Agrawala on the show. And along with that, we also have Nishchal Maheshwari joining us. A very good morning, gentlemen, and thank you so much for your time. And Aditya, firstly, let me come to you for the trade setup this morning, because we managed to close above that 25,000 mark. Even Nifty Bank was showing a bit of a resilience. Help us understand what will be your strategy for today.
Morning, Srishti. Thanks for the show. Clearly, so we were waiting for this close above 25,000 mark on the Nifty, and finally we got that close above 25,000 mark. And if you take a look at the GIFT Nifty, it's suggesting towards another positive opening for our markets. So overall, my sense is gradually we are inching towards that mark of 25,200 and 25,400 eventually. And given a few weeks, my sense is Nifty should trade near these levels of 25,200, 25,400 on the upside. What is interesting is the range is shifting gradually upwards. Earlier, the supports were somewhere around 24,600, then it shifted to 24,700, now 24,800 on the downside is acting as a good support area. And once we sustain above 25,000 decisively, Srishti, my sense is 25,000 will act as a good support zone. Overall, I would still go long on the Nifty, about 25,000 for a target 25,200, 400, which we've been maintaining for some time now. And as we've been mentioning, Bank Nifty, something that has to start chipping in now onwards. And once that happens, you will see a significant bump up both on the Nifty and the Bank Nifty. And the setup is clearly there for large cap private sector banks to start outperforming now. Names like Axis, Kotak, HDFC, all are looking interesting for a good 4 to 5% upside from current levels. And on the Bank Nifty, once 55,000 is taken out, my sense is another 500 points can be seen on the Bank Nifty. So both Nifty and Bank Nifty seems to be placed comfortably at this point of time, Srishti. And I don't see any major jerk on the downside. So I would stay long both on the Nifty and the Bank Nifty, and also place some stock-specific and sector-specific moves.
Okay, so that stock-specific and sector-specific idea, Aditya, we'll just come back to you on that. But Nishchal, hi, morning. What could the reaction be today of some of the IT stocks in Nifty IT overall, given that Infosys's buyback price is slightly lower than what the street was estimating? What do you think the reaction and the sentiment around the IT stocks could be today?
I think it will be overall positive only because I think the stocks have already corrected quite a bit. And this is the start. I think there are at least 2 more companies which are eligible for doing a buyback, TCS and Wipro. So at least maybe 1 or 2 of them maybe also come back. So I'm saying this distribution of cash on the balance sheet, one actually helps these companies to improve their ROE, ROCs. And secondly, it also gives money in the hands of the investor. So I think this is a good one. I don't see any much downside from here for most of the IT companies.
All right, so that's the take coming in on the IT companies then. But Nishchal, of late, a lot of this excitement is what we have seen in the auto OEMs. What's your current take on the auto sector overall? Because given the run-up that we've already seen in the auto OEM counters, where are you finding opportunity right now? Is it more into auto ancillary players or rather in some of these commercial vehicle lending arms as well? What's your overall take?
So I would continue to bet on the auto OEMs at the moment because at least for the next 2 or 3 months, you are going to see positive numbers coming from the OEMs. The rate cut is there, the festive season is there, and there is at least in the 4-wheelers, we are seeing very, very high inventory levels. So that is going to get cleared out, and fresh stocks are going to go into the pipeline. So I see strong numbers coming for the next 2 or 3 months at least as far as the OEMs is concerned. So for the quarter, I would play OEMs first. And within the OEMs, I would actually prefer a 2-wheeler over a 4-wheeler because the 2-wheeler, the inventories are much less basically. And obviously, we are seeing this time a good demand coming from the rural side. So 2-wheelers are more prevalent in the rural side. So 2-wheelers, OEMs, and thereafter we are going to look at the auto ancillary and further down the line. I think for the moment one can avoid the financial companies focused onto the auto side. Focus on OEMs and auto ancillaries at the moment.
Okay, so that's a take coming in on autos. We also have a note coming in from the brokerage house Citi on autos, wherein they're saying that they have maintained their buy on Maruti, raised the target price from 14,400 to 17,500 now. So bullish on Maruti. For M&M, they also maintained their buy rating, but have also raised the target price to 4,170 compared to 3,700 earlier. For Hyundai Motors, they maintained buy and also a price hike coming over here, a target price hike to 2,900 from 2,400 earlier. So these are the three stocks in focus and the biggest GST beneficiaries according to Citi. But Aditya, coming back to you, you were talking about how it's time to be sector specific and stock specific right now. So on that note, what are some of the stocks that are looking attractive to you this morning?
Morning, Sneh. So my sense is the IT, which is looking up and above after this announcement from the Nifty NV on the buyback, can have more legs on the upside. So I've got an Coforge and mid-cap IT space is looking quite interesting, apart from the large-cap IT space. So Coforge is looking interesting for me. I'll go with a buy on Coforge for a target of 1,900 on the upside, with a stop loss at 1,700 on the downside. And Alchem Laboratories is also something which is looking quite interesting. So the pharma space is also quite interestingly placed at this point of time. And Alchem, I believe, can be bought at current levels or a target of 5,650 on the upside, with a stop loss at 5,270 on the downside.
All right, so those are the calls coming in from Aditya. IT and pharma companies will also be in focus. But Nishal, the other pack to watch out for is actually the defense pack, because of late that is showing a bit of a momentum right now, and we have seen already good moves in BEL and some of these other counters like HAL, Moscow Dog. They were also seen to be flying high. And in the latest, we also get to know that the U.S. Department of Defense officials set to arrive in India between 16th and 19th September. The arrival is expected. Help us understand, what are your thoughts on the defense pack right now? Will that be a value buy at this price point?
So defense is a very long runway play, basically. I think for the next 5 years at least, you have a very strong visibility in most of the defense companies. The only issue remains to be is that at the moment, I think more or less for the next 2 years, whatever the visibility is there is already priced in, and pretty well priced in actually. So if you are seeing maybe some, if you want to add defense, it should be on a correction. I don't think so at the moment one should be looking at it. If you really look at it, HAL has got a 2 lakh crore order book, Moscow Dock, Cochin Shipyard, all of them have a maybe 50, 60, 70,000 crore kind of order book. So another 5-10,000 crore is not going to change the game, because the execution capability is limited for all these companies in a year. So your numbers, the P&L is not going to change for the next 1 or 2 years, which is already, I think the market is discounting well. So wait for a correction to happen in the defense names before you get onto this.
Aditya, do you foresee any correction happening anytime soon in defense names?
Not really, Aisha. It could be more of a consolidation, I believe. And I agree with Nishal to some extent. A lot of these stocks have run up too soon, too sharply. And you need some time correction more than price correction in these stocks. But overall, I think these still offer an excellent opportunity from a longer term time horizon. So a name like a BEL or an HAL or a Moscow Dock, or even a small companies like Apollo Microsystems and all also fit into this list. So my sense is you should have a portfolio of defense stocks and have a staggered approach in buying these stocks in a phased manner. Maybe an SIP route could be a better approach to get into these defense stocks. But yes, give it a year or maybe 2 years and more, and you will see a decent upside in all these names.
Okay, so that's the take coming in on some of those defense counters and how they're expected to shape up on the charts. But once again, you have news flow coming in from railway counters. Railway has been in focus for quite some time. But other than that, Aditya, we also have news flow coming in on Cohance Life Sciences, wherein they've passed the US FDA GMP inspection for their Andhra facility with 0 Form 483 observations. So it is looking positive on the back of this news flow. But on the charts, how has Cohance been shaping up? Recent name change. But other than that, what is the technical take on the charts?
Quite an interesting one, Sneha, actually. So after a move, stock went into a minor consolidation or a correction phase. And from there, it's formed a base. And a couple of days back, we saw buying on good volumes. So overall, my sense is from here on, you will see higher levels in Cohen's for a target of 1250, 1300 on the upside. These are good levels to get into the stock. On the downside, 950, 940 is a good support area. So put that as a stop loss and look for a target of 1200 to 1300 on the upside as potential targets in Cohen's. Overall, I do like the pharma space, and for next 1 quarter, pharma is one space which should give you decent returns over any other sector at this point of time.
Pharma has clearly been the darling of the market of late. But let's move on and let's talk about some of the other stocks which are the newsmakers. And Gail is considering a public listing of its city gas distribution subsidiary, that's Gail Gas, and is inviting expressions of interest from consultants to advise on the listing as well. Ashesha is here with more details.
Well, yes, Gail will be in focus today, and this is because the management is now inviting expression of interest from consultants. This is to advise on listing of Gail Gas. Gail Gas, remember, is Gail's wholly owned subsidiary, and if at all this goes through, this will be a big positive for Gail as well. Now, if we talk about Gail Gas, it operates directly in about 16 geographical areas. It operates in 9 geographical areas through its joint ventures, and Gail is also in the process of transferring 6 of its own geographical areas to Gail Gas, which is its wholly owned subsidiary. So that's as far as operations of Gail Gas are concerned. Meanwhile, Citi has also come out with its report on this, where they believe that the listing of Gail Gas is likely to go through, and as and when it goes through, it could add about 5 to 6% value for the shareholders of Gail, which in rupee, in absolute terms, translates to about 10 to 11 rupees per share. And they say regulatory tariff hike remains the key catalyst for the stock going forward. So yes, big development coming in for Gail, where it is exploring listing of its wholly owned subsidiary Gail Gas, and the stock in focus on the back of this. Okay, so Gail is also going to be a very closely watched stock in today's trading session. Ashesha, thanks for taking us through that. Nishal, any thoughts on the listing of its subsidiary, and overall your thoughts on the oil and gas space? Because on the year-to-date basis, very mixed moves coming in, because on one hand you have BPCL, IOC that have done pretty okay, but on the flip side you have Oil India, Petronet in fact is down 20% on a year-to-date basis. So your overall take on oil and gas, and also on Gail's subsidiaries listing now?
So oil and gas as a space, if you really look at it, I think there is good value out there. Whether it is the upstream companies or the downstream companies, I think oil is at the more or less at the bottom of it. If you are seeing some revival in the global economy, I see oil prices going up. So that's why basically you are going to see maybe Oil India, ONGC and all maybe doing better from here onwards. As far as the oil marketing companies are concerned, I think they are very clearly value plays and they are unlocking value. You have seen similar thing happening in Gail, a very strong company. Now they are looking at saying that, okay, there are a lot of companies which are along with it. There is a petrochemical company also in Gail, and maybe at some point of time they will decide to unlock that also. So though I do not cover Gail basically, but I think it's a good move as far as Gail is concerned for unlocking value there.
In fact, a couple of brokerages are also pretty positive about, the OMCs at least. Citi came out with a note yesterday wherein they're maintaining their buy on HP, BP as well as IOC, and they've upped their target prices as well. Of course, there are a lot of notes coming in on Adani Ports as well, wherein Macquarie is maintaining an overweight on the company. They've upped their target price as well to 1760. Jefferies as well, a buy on the company with their target price now at 1815 rupees per share, which is both auguring positive for Adani Ports too. And yesterday some of these names were quite active in trade. But yes, it really circles back to Pharma and Select Pharma, which continues to see some buying interest in the market. Yesterday, of course, it was Oro Pharma, which jumped up quite nicely. There were other names like BHEL, NHPC, Gail, like Snehi just flagged off, and Hindustan Zinc, which also, held out quite smartly in trade. But the other pocket which didn't do all that well was the capital market plays. They were the ones, while they did lift off a little bit from the day's lows, but most of these stocks were the ones which were under pressure. Aditya, anything that you're reading in particular for the charts of an Angel One, BSC or a Nuvama?
Let's talk about BSC first, Aisha. My sense is these are good levels to latch onto the stock. These corrections are providing an opportunity to go long on these companies. And it's more of a positional bet that I'm looking at in the capital marketplace. So at current levels, one should definitely look at adding BSC in the portfolio. Place a stop loss somewhere around 2100 on the downside, and you can easily see levels of 3000 plus from a medium to longer term time horizon if I talk of BSC. Talking of some of the direct brokerages, they are seeing a bit of a profit taking after the recent update on the number of decline in the customer base. But overall, my sense is they will also see a bottom somewhere around 2100 on Angel One is where good supports lie. And if I talk about Nuvama, that too will see some kind of a bottom formation close to about 6100. So I don't see too much of a profit taking both in Angel One and Nuvama. But if I have to pick something, I would stick to exchanges rather than the direct brokerage plays as of now. So look at maybe an MCX or a BSC. And also a CDSL looks very interesting to me at this point of time, Aisha.
All right, so that's the take coming in on some of these exchange-related counters, but quite many block deals happening this morning. We have seen a block deal happening on Eternal, Bank of Baroda, Bharti Airtel, PFC, Shriram Finance, and even Reliance Industries. But Aditya, just wanted to have your sense on Reliance Industries because in the last 15 days or so, we have seen so many different sort of announcements. There was AGM, and post that, no significant move of late. I believe that in the last 3 to 4 trading sessions, the stock is consolidating in a very, very tight range. What's your sense on Reliance Industries? Because given the fact that the outlook for markets is bullish, can Reliance Industries give some bit of a confidence and push from those levels?
I would like to hope so, Srishti, and I would want Reliance to participate now because as you clearly pointed out that it's in a very narrow consolidation phase. It's not correcting, it's not showing any kind of an up move as well. 200 DMA is acting as a major support for the stock. I would like to see the stock above 1450 odd levels for a clean move to levels of 1600 on the upside. I'm not too excited with Reliance just yet, but yes, the setup is getting it, taking the Reliance closer to that breakout point of 1450 on the upside. So I would give it a few more trading sessions, but eventually I see Reliance breaking out of that hurdle of 1450 and can test levels of 1600 from a medium-term time horizon because clearly the setup is there. So I don't mind taking a position in Reliance at current levels, but give it at least a month or so and you will see decent upside in Reliance as well.
Okay, a bunch of other stocks which are going to be in focus, and Realty, they've bagged an order worth about 103 odd crore rupees. Look out for the entire railway pack because I think day before it was Titagarh, yesterday it was RVNL, and today it's Realty. So the order flow news seems to be picking up, and of course the stocks have been reacting to that as well. The other one, of course, is NBCC. They've signed an MOU with RICO for projects worth about 3,700 crore rupees. And then there is Lodha as well, wherein they've signed an MOU worth about 30,000 crore rupees with the Maharashtra government for a green integrated data center park now in Palava. Nisha, wanted to get your thoughts in on the entire Realty pack. Mainline companies now moving to data centers, expanding their portfolio beyond their, domain geography and pretty much across the country. What's looking the best bet right now within the Realty pack to you?
I think they are also seeing that the prices are peaking out. So it's time to diversify. But having said that, I think real estate, what I see here is basically sort of peaking out as far as the prices are concerned, at least in the markets, the major markets like Mumbai, Delhi, Bangalore, and possibly given this kind of job losses, especially on the IT side, I see some pressures there in the real estate side. As far as the data center is concerned, I have yet to see the details, what kind of investment, what kind of ROE, ROI, ROC they are going to make on this kind of large investments. So I'll not be able to make a comment there basically, but I really see as far as the real estate sector is concerned, sort of peaking out.
Okay, prices peaking out. That's an interesting take there. But Nishal, always good to have you on the show. Thanks for your time.
Thank you.
Let's focus on the rupee. The fact that it already clocked a record low in yesterday's session. What is it looking like? The fact that it's been plummeting pretty much against